talk about that. So what is total revenue? The formula is price into quantity sold, right? The amount a firm receives for its sales of its output. How much quantity is sold and what is the market price? We multiply that one and we get the total revenue. We'll see in the formula in our couple of slides ahead. And what is total cost? The market value of inputs of a firm uses in production. To see how a firm maximizes its profit, we must understand how to measure total revenue and total cost. We already know that total revenue is equal to price into quantity sold. So let's see the profit. So profit is equal to the total revenue minus total cost. So we already know that total revenue is equal to market price multiplied by quantity sold, and we already know that quantity sold depend on demand, while demand is based on buyers, right? So it means company cannot control 100% its revenue, right? So let me just remove it here. So we know that the economic objective of the firm is to maximize the profit as large as possible. So we have to maximize this as large as possible. So there are two methods to do that. One is either we increase the total revenue, total cost stay the same, then the profit will be highest. Number second is that profit will be equal to total revenue minus total cost. The second one is either we decrease our total cost and we maximize our profit. So that is our first option, that is our second option. So option one has a loophole, that because we cannot control the total revenue, because total revenue also depend on the demand, and who creates demand? Buyers. So you cannot say that 100% that I control my sales, but we can increase our profit by controlling our cost. So this chapter is all about cost of production, so we can minimize our cost to increase our profit. So that is how we maximize our economic profit. So here's a practical example. I just want you to pause the video and try to solve it by yourself. It's fairly simple, in which you have to find out the total profit for the Zila Corporation. Okay, if your answer is A, you are in good shape. So let's move forward. And now classification of cost on the basis of cost as opportunity cost. So a firm's cost of production includes all the opportunity cost of making its output of goods and services. So now are you clear that why we are focusing on cost of production rather than total revenue? Right? Because total revenue includes a part of consumer behavior, because who creates demand? Buyers, and our sales depend on buyers. So we have other variables that influence the demand, that is, for example, consumer income, taste, expectation, availability of substitutes, right? So that's why we are just talking about here cost of production. So there are explicit costs and there are implicit costs. Explicit costs are those costs which involve actual or direct outflow of cash or money by the firm. For example, which you actually pay out of your pocket. For example, paying for flour, sugar, and working, right? So these include actual cash outflow, right? So implicit cost is costs, but both are input costs, right? Because we are talking about the cost of production. So our input costs that do not require an outflow of money or cash by the firm. For example, payment of Helen's skills if she works somewhere else rather than its own factory. So here is do not include actual cash outflow. So implicit costs are implicit, means it do not sorry, it do not include the actual cash outflow. So the example here is that if Helen, she wasn't opening her own cookie factory, rather she is working for another firm, and she would be earning a salary, so that lost salary would be implicit cost. Okay, and that would be also called opportunity cost. Okay, so here we go. I have pasted a concept checker here. You pause the video and try to solve it by yourself, and at the end match the answer. Just pause here. Okay, if your answer is A, then you are in good shape. If you have any problem, please do write us in our WeChat group or our Blackboard discussion forum. Okay, then we will explain this as well. Here we go. We have another practical example. Just pause the video. Make sure that you actually understand what is explicit cost and what is implicit cost. Just pause the video and try to answer your question, or try to answer the best multiple choice out of A, B, C, D. If your answer is C, then you are in good shape. Wow, another practical question. Please pause the video here and try to solve it by yourself, in which we talk about what is implicit cost. Answer is C. If you have any ambiguity, please do write us in our WeChat group, and I will explain it over there as well. And now the difference between economic profit and accounting profit. So economists measure a firm's economic profit as total revenue minus total cost, right? And total cost includes both explicit and implicit cost. While the accounting profit, it only records total revenue minus the firm's explicit cost, right? So if you write it down here, that economic profit is equal to total revenue minus explicit cost minus implicit cost. While if we write it down, the accounting profit is equal to total revenue minus explicit cost. So by just looking at the equation here, what you can extract, we can extract that the accounting profit is always greater than economic profit, or economic profit is always lesser than accounting profit because of implicit cost. So our previous equations, if you see those equations, then you can just exert some kind of result here. That is, when total revenue exceeds both explicit and implicit cost, the firm earns economic profit, right? If total revenue greater than implicit cost plus explicit cost, then we can say that company has economic profit, right, greater than zero. The economic profit is smaller than accounting profit. We just discussed in our previous slide, because in accounting profit, accountant only deduct outflow as a cost. So Helen's lost income, which is implicit cost or opportunity cost, is not deducted while calculating accounting profit. So we can figure it out here through the figure 1 here, that when what is economist view and what is accountant view. Here we go. The accountant view, revenue minus explicit cost, and we got the profit. So in accountant view, this is the profit, but in economist, the view is different, because economist also less, what we call that, we call it implicit cost, right? So implicit cost plus explicit cost is equal to, its name is total opportunity cost. The individual name of implicit cost is opportunity cost, but all the cost which is implicit cost plus explicit cost, we call this total opportunity cost. So we can also write it down. Let me just remove some. So we can also call that economic profit is equal to total revenue minus total opportunity cost, where the total opportunity cost includes implicit cost and explicit cost, right? So here we go, we have a concept checker, that is economic profit. Please answer the question at the end, match the answer, and if you still have any ambiguity left, please do write us in our WeChat group. Here we go. If your answer is A, you're really understand the concept and you're in good shape.